Do you want to secure your future with a lifetime regular income? Imagine a guaranteed source of revenue, not just for yourself, but also for your spouse. Now, picture this income earning interest rates of up to 14.96%, all backed by the government. Yes, you read that right. It's not a dream, it's a reality waiting for you. Learn how you can leverage this opportunity to secure your future, financial freedom and peace of mind. Yes, this can be achieved through LIC's new Jeevan Shanti plan. LIC has done latest modification to this plan as on 7th February 2024. After this modification, LIC has increased the pension rates up to 14.96%. One can get these increased rates for lifetime. LIC Jeevan Shanti is a single premium pension plan. To take this plan, you need to pay a one-time lump sum amount. It is a deferred annuity plan. Here there is an option to defer your pension for a period ranging from 1 to 12 years, allowing you to receive a higher rate of interest on your investment. By opting for a longer deferral period, you stand to accumulate more savings over time before commencing regular pension payments. If you want to get immediate pension, you can purchase LIC's Jeevan Akshay. Here pension starts from next month itself. LIC's new Jeevan Shanti provides guaranteed pension rates for lifetime. That means once you select the deferment period, pension rates are fixed for lifetime both for you and your joint life. There are two types of pension options: single life annuity and joint life annuity. In single life annuity, single person receives guaranteed lifelong pension. In the case of the annuitant's death, the pension stops, and the nominee receives 105% of the initial amount invested. If you have taken the policy on joint life, first person receives lifetime pension. After his death, joint life receives the same amount of pension. The second life may be your spouse or children or parents or your grandchildren or siblings. If joint life also dies, death benefits are given to the nominee, which is 105% of the initial amount invested. Let us explain this simply with an example. If you are 40 years old and wish to invest 10 lakhs rupees, the total amount payable would be 10 lakhs rupees plus Rs. 18,000 GST at current rates, resulting in a total of 10 lakhs 18,000 rupees. Let us assume you want to take pension for joint life. If you choose a deferment period of 12 years, it signifies the duration after which you desire to commence receiving the pension payments. The longer you defer, the higher the interest rate you will receive. The minimum allowable deferment period is 1 year, while the maximum is 12 years. Let's assume you want to choose the yearly pension mode. At the age of 40, if you invest 10 lakhs rupees, the total premium payable would be 10 lakhs 18,000 rupees, inclusive of GST. Now, you will need to wait for 12 years to start receiving your pension, as you have chosen a 12-year deferment period. You can choose minimum 1 year to 12 years deferment. At the age of 52, your pension begins. At current rates, you receive a yearly pension of 1,38,600 rupees, which equates to a rate of 13.86%. Below is a chart illustrating the new rates of pension effective from 7th February 2024 for different age groups. Here are the pension rates for different ages with various deferment periods. For example, if your age is 50 and you defer it for 6 years, you would receive a lifelong guaranteed pension of 99,000 rupees at the rate of 9.9% for 10 lakhs rupees. Alternatively, if you defer it for 3 years, you would receive 83,400 rupees as a lifelong guaranteed pension at the rate of 8.34%. Now let us see what happens in case of death of annuitant. In the event of the annuitant's death, the joint life beneficiary receives the same amount of pension, which is a yearly pension of 1,38,600 rupees at the rate of 13.86%, as per our example. In case of death of second life, nominee gets 105% of the initial amount invested. In our case, the nominee receives 10,50,000 rupees. The main features of new Jeevan Shanti plan. Minimum entry age should be 30 years and maximum entry age would be 79 years. Minimum purchase price should be 1,50,000 rupees and there is no limit for maximum purchase price. You can choose pension mode, yearly, half-yearly, quarterly or monthly. Minimum deferment period should be 1 year and maximum you can defer it for 12 years. Additional benefits. You have an option to surrender the policy after few years if you do not want to continue. If you surrender within first 3 years, you would get only 75% of the purchase price. From 4th year onwards, you would get 90% of the purchase price. After completing 3 months of the policy term, policyholders can request for a loan. You need to pay interest on that loan. You will get tax benefit on purchase price under Section 80C. Pension amount is added to your total income during tax calculation. Death claim is tax-free. Nominee need not pay any tax on death claim. To get this plan, you can contact Mr. Nithyananda Abhyankar, Financial Planner and Investment Advisor. The contact details are displayed on your screen. If you are finding this video useful, make sure to subscribe to my YouTube channel for the latest videos. Please share and subscribe.